welcome to the Mortgage Rate Weekly Market Update for the week of February 5th, 2018. Hello, I'm John Thomas with Prime Residential Mortgage. Here to give you your update. Well, last week was not good for mortgage rates. They did spike higher again. Take a look at the bond chart on the screen. You can see mortgage bonds have been selling off since the beginning of the year, broken through multiple floors of support. Stock market has rallied, which caused the sell-off in the beginning of the year, but then the stock market this week has actually sold off to end the week. Mortgage bonds still sold off, so that's just not good. You see that downward trend there. We had the red candles down each time selling off, breaking through floors of support. So again, with that big red candle ending the week on Friday in the face of a 600-point drop in the Dow, that is not good news for the bond market. Still got a ways to run down before we find any floor of support. And with the treasuries, the yields in the treasuries just keeps moving up. We're going to recommend locking your mortgage rate. Locking the rate you got. It looks like it could get worse before it gets better. So go ahead and lock in your mortgage rate to start the week. Now, if we dig into the economic news, big report last week was the jobs report for January 2018, which was released on Friday. It showed 200,000 jobs were created, which was above expectations of 175. So that was good. The unemployment rate remained the same at 4.1%, which is a great number on unemployment. Now, the U6, which measures total unemployment, did move up slightly from 8.1 to 8.2%, but still a good number there. The report did show a significant rise in annual wage growth. It rose from 2.5% to 2.9% year over year. So wage growth inflation is the enemy of mortgage bonds and is the big factor that caused mortgage bonds to sell off on Friday in the face of a stock market sell-off. Typically, stock market sells off, bonds will benefit. You should have seen mortgage rates move lower, but they actually moved higher because wage growth inflation reared its head in the jobs report. But inflation on consumer level did remain tame because we did get the core personal consumer expenditures, or the PCE, for December 2017. It came in at 1.5% year over year, which remains well below the 2% Fed target. Low inflation is bond-friendly news, but again, that was offset by the wage pressure inflation we saw on Friday. Then we saw weekly issued jobless claims come out on Thursday. Claims dropped 1,000 claims to 230,000 claims for the week. That's a great number, well below the 300,000 marks, which starts to signal an unhealthy labor market. And it was actually better than expectations of 235,000 claims. So labor market doing very well. Now, if we move over to the housing news, we saw the S&P Case-Shiller 20 City Home Price Index for November was released, and it did move up 0.1% from October to November. So November was 6.4% year-over-year price appreciation. The big driver behind this, again, is still low inventory, is pushing home prices higher. Home prices are rising 3 times faster than inflation, and that may continue to do so as long as we have low inventory. So home prices are outpacing inflation, which is great if you own a home, because that means your value is going up. If you're looking to buy sooner rather than later, because as the year moves on, home prices are going to go up, which means the same house is going to cost you more. Then we saw pending home sales for December 2017 were up 0.5% on the index to 110.1. Pending home sales are also up 0.5% year over year. So low inventories was holding down pending home sales. There's buyers out there that want to buy, but we've got this low inventory, and that's pushing home prices up. So we're going to see that continue throughout 2018. Now, in the local news, if you don't own a home yet or you're looking to buy another home, we've got a free first-time homebuyer seminar this Saturday, February 10th, in Newark, Delaware, from 10 a.m. to noon at the Christiana Hilton Hotel. Then we've got one in Wilmington, Delaware on Wednesday, February 21st from 6 p.m. to 8 p.m. That's at Independence Mall on Concord Pike, Route 202 there. If you want to register for either one of those events, just call in the office at 302-703-0727 or online, www.delawarehomebuyerSeminar.com. Look forward to seeing you guys next week.